Listen very carefully. A technical pattern just completed in silver that has only appeared 3 times in the past 50 years. The last time this exact formation emerged in precious metals was in 1979, right before gold exploded 400% in less than 12 months. Most technical analysts have completely missed this signal. Why? Because they're focused on the wrong time frames. I've spent weeks analyzing the quarterly charts, comparing today's silver structure to historical precious metals breakouts. And what I discovered should genuinely shock you. Silver isn't just forming a random rally. It's replicating the exact triple breakout pattern that preceded the most explosive precious metals move in modern history. The question isn't whether silver follows gold's 1979 playbook. The question is whether you're positioned before the acceleration phase begins. Here's what makes this pattern so incredibly significant. A triple breakout happens when the price simultaneously smashes through 3 distinct resistance levels on different time frames. Weekly resistance, monthly resistance, and quarterly resistance all surrendering at once. This convergence is extraordinarily rare. It requires years of accumulation and price compression to build up. When triple breakouts occur, the moves that follow aren't measured in percentages. They're measured in multiples. The energy stored during years of consolidation gets released in explosive moves that seem impossible, until you understand the technical structure driving them. Most retail investors are watching the daily and weekly charts. They see normal volatility, normal fluctuations, and they assume nothing significant is happening. But the quarterly chart tells an entirely different story. And right now, that story matches the 1979 setup with disturbing precision. The investors who recognized this pattern in gold 45 years ago captured generational wealth. Those who dismissed it as impossible watched from the sidelines as gold transformed from $200 to over $800 in mere months. Silver is flashing the same signal right now, and most people are making the same mistake. Before I break down exactly what this triple breakout pattern reveals and why the 1979 comparison matters so much, I need to ask you for something. If you're serious about understanding the technical patterns that actually predict major moves, not the noise that fills most financial analysis, then this channel was created specifically for you. Take 2 seconds right now and hit that subscribe button. The technical signals forming in precious metals are going to wait for investors who are still focused on the wrong time frames, and drop a comment below. Tell me where you're watching from. Are you in the United States, Canada, the UK, Germany, or somewhere else around the world? I personally read every single comment, and I want to know who's paying attention to what the quarterly charts are revealing. Now, let's decode this triple breakout pattern and see why silver is replicating gold's 1979 setup. To understand why this matters, you need to understand what creates it. A triple breakout isn't just the price moving higher on 3 charts. It's the simultaneous resolution of compression patterns across multiple timeframes, where each one reinforces the others in a cascading momentum surge. The first breakout happens on the weekly chart. This is where most traders focus their attention. Silver pushed through weekly resistance that had contained prices for months. By itself, this breakout is significant, but it's not extraordinary. Weekly breakouts happen all the time and often fail. The second breakout happens on the monthly chart. This requires breaking through resistance that has held for years, not just months. Monthly breakouts are far more significant because they represent a structural shift in supply and demand that temporary forces reverse. The third breakout, the one that most analysts completely miss, happens on the quarterly chart. This is resistance that has contained prices for decades. Quarterly breakouts are generational events. They don't happen often because they require years and years of accumulation to establish the compression needed for a resolution. When all 3 of these breakouts happen simultaneously, something profound occurs. The energy stored across all 3 timeframes gets released together. The momentum that was held back by weekly resistance reinforces the monthly breakout. And the monthly momentum amplifies the quarterly breakout. This cascading effect creates moves that look impossible when you're just looking at the shorter-term charts. Really, let that concept sink in for a moment. Silver just broke through resistance on its weekly, monthly, and quarterly charts, all within the same movement. This is not normal price action. This is the technical signature of a structural shift that most investors alive today have never witnessed. The quarterly chart is especially important because of what it reveals about accumulation. For prices to break through quarterly resistance, massive amounts of capital have to flow into an asset over a very long time. This isn't retail speculation. This is institutional positioning that has been building for years, finally reaching a critical mass. Silver's quarterly chart shows a compression pattern that has been building since 2011. That's 13 years of consolidation, 13 years of accumulation, 13 years of energy storage that is now releasing in what technical analysts call a vacuum breakout. Once quarterly resistance breaks, there is often nothing above to stop prices until they reach levels that seem absurd from today's perspective. The vacuum exists because no trading happened at those higher levels for so long that resistance simply does unexist anymore. This is the triple breakout. And it's the exact same pattern that preceded gold's historic 1979 explosion. Let me take you back to 1979 because understanding what happened then illuminates what's potentially happening now. Gold had been consolidating for years after its initial move higher in the early 1970s. Most investors believed the precious metals rally was over. Gold had already risen substantially from its fixed $35 price, and mainstream analysts were arguing that any further gains were mathematically impossible. But the quarterly chart told a different story. Gold was forming the same triple breakout pattern we are now observing in silver. Weekly resistance broke first. Monthly resistance followed shortly after. And then, the quarterly breakout triggered a move that shocked the entire financial world. Let's travel back in time for a moment. The year is 1979. Over 12 months. From January 79 to January 80. The price of gold skyrocketed from around $200 an ounce to over $800. That's a 400% move in a single year. Investors who saw what was happening, who recognized the technical pattern forming on the charts, captured a level of wealth that can change a family's future for generations. But those who dismissed the signs, who thought it was just noise or exaggeration, could only watch in stunned disbelief. So, what drove that historic move? It was a perfect storm of structural changes in monetary policy, runaway inflation, and a seismic shift in investor psychology. But here's the key. The chart pattern, a powerful triple breakout, didn't cause these things to happen. It revealed them. The pattern was the market's way of screaming that something fundamental had changed. Long before the mainstream news and financial experts caught on. This is a critical concept to grasp. Technical patterns don't magically create market moves. They identify the compression of energy like a coiled spring that will fuel those future moves. In 1979, the triple breakout pattern told a clear story. Gold's long period of going sideways was over, and a new, explosive phase was about to begin. The investors who capitalized on this weren't necessarily smarter than everyone else. They were simply looking at the right map. While most analysts were lost in the weeds, debating daily blips and weekly trends, the quarterly chart was showing a breakout of historic proportions taking shape. Now, let's come back to the present day. Take a look at silver's current quarterly chart. The similarities to gold back in 1979 are so striking they demand our full attention. Just like gold then, silver has been consolidating for years after a major peak. Just like gold then, silver has been largely dismissed by mainstream analysts, written off as an old story, a relic. And just like gold back then, silver is now breaking through a level of resistance on the quarterly chart that has held prices down for over a decade. Does this triple breakout pattern guarantee Another 400% move? Course not. History rhymes, but it never repeats exactly. But what the pattern does guarantee is that the long, frustrating consolidation phase is finished. Whatever silver does next, it will not be a repeat of what it has done for the past 13 years. The entire technical structure has fundamentally changed. So let me walk you through exactly what Silver's charts are showing us right now, and why this moment is so incredibly significant from a technical standpoint. First, let's look at the weekly chart. For months, the $26 level acted as a heavy ceiling, capping every rally. Recently, silver broke through that resistance, and it did so with expanding volume. This is a crucial confirmation signal. It tells us that real, genuine buying pressure is driving the price higher, not just short sellers covering their bets. Now, let's zoom out to the monthly chart. Here, silver has broken through the $30 level. This isn't just any level. $30 has been the line in the sand since 2013, with the exception of a brief spike in 2020. This represents a full decade of resistance that is now surrendering. Every monthly candle that closes above this level reinforces the idea that this isn't just a temporary blip, but a deep structural shift in the market. And now for the quarterly chart. This is where the picture becomes truly profound. On this long-term view, silver has decisively broken through the descending trend line that has connected the lower highs all the way back since the peak in 2011. Think about that. This trend line represents the entire bearish structure that has defined silver's trading for 13 years. Breaking this line doesn't just signal a rally. It signals the end of an entire era for silver. But the pattern is even more powerful than simple breakouts. What makes this a true triple breakout is the incredible compression that came before it. Go back to the weekly chart. You can see silver forming a coiling paterna, series of higher lows pushing up against that flat resistance. This action compressed the price into an increasingly tight range, storing up kinetic energy like a spring being pushed down. Zoom out to the monthly chart, and you see the same compression playing out on an even grander scale. Years of trading stuck within a defined range, with every test of support and every push against resistance just adding more and more energy into the system, all waiting for an eventual, powerful resolution. And finally, on the quarterly chart, the compression is the most extreme of all. 13 years of consolidation. This is the longest such period in silver's entire modern trading history. Imagine a spring being wound tighter and tighter for 13 straight years. The release from that kind of tension is bound to be proportionally explosive. This is the technical reality that most analysts completely miss because they simply do one look at quarterly timeframes. They see a weekly breakout and say, "That's significant." They might notice the monthly breakout and say, "Okay, now I'm interested." But they almost never connect these dots to the massive quarterly structure that reveals the true, awesome magnitude of what is forming right now. This is why the 1979 gold parallel is so relevant. Gold's earth-shattering explosion didn't just come from nowhere. It came after years of compression that finally resolved to the upside. Silver today is showing the exact same technical signature. And here's the kicker. The compression phase for silver has been even longer than it was for gold back in 1979. More compression means more stored energy. More stored energy means a more explosive resolution. This isn't just a story. It's the mathematical reality of technical analysis that holds true across all markets and all time frames. So, understanding this triple breakout pattern is valuable, but knowing how to position yourself for it is absolutely essential. The worst possible approach is to wait. Waiting for confirmation from mainstream analysts. Waiting for it to be on the cover of financial magazines. By the time they finally recognize what's happening, the biggest, easiest part of the move will already be over. The investors who captured gold's 400% run in 1979 got in before the popular story caught up to the technical reality. Those who waited for everyone to agree ended up buying near the top. The sophisticated approach, the professional approach, is to recognize that these triple breakouts create a specific, predictable trading dynamic. After the initial powerful breakout, prices will often pull back and consolidate for a short period. This is not a sign of weakness. The market taking a breath, digesting the big move before launching into the next phase of acceleration. These brief consolidations, these pullbacks within the new uptrend, represent the optimal entry points. The pattern has been confirmed. The new direction has been established. This means that temporary dips are no longer warning signs. They are opportunities. Professional traders use what's called multiple time frame analysis to pinpoint these entries with precision. When the long-term quarterly chart is bullish, any pullback on the monthly chart becomes a potential buying opportunity. When the monthly chart is bullish, any dip on the weekly chart becomes a prime entry point. The larger time frame gives you the context, the big picture that makes your shorter-term decisions clearer and more confident. The roadmap is right there in front of us, written in the language of the charts. The question is, are you listening to what it's saying? Have you seen what's happening on the silver charts? It's a pattern so rare, it's only appeared 3 times in 50 years. And right now, it's flashing a signal that could change everything for silver investors. This isn't just another small move. This is what we call a triple breakout, and it's suggesting that the game has completely changed. For over a decade, the $30 mark has been a massive wall for silver. Every time the price tried to push past it, it got knocked back down. But now, that ceiling is becoming the new floor. What does this mean? It means that any dips back to that $30 level are no longer signs of weakness. They're buying opportunities. They are strategic moments to build a position before the next major leg up. But here's the crucial part. Explosive moves like this bring incredible volatility. The price won't just go up in a straight line. There will be sharp swings, big ups and big downs that will test your nerves. This is where most people get shaken out. They either go Elon, get scared by a sudden drop, and sell at a loss. Or they sit on the sidelines, too afraid to jump in. The key to navigating this is smart position sizing. It's not about how much you can buy. It's about buying an amount that lets you sleep at night. It's an amount that allows you to hold on through the turbulence without making emotional decisions. Think back to the legendary gold rush of 1979. Who were the investors that captured that life-changing move? It wasn't the people who bet the farm on day one. It was the disciplined investors who sized their positions correctly, who believed in the long-term trend, and who had the conviction to hold on through the wild ride. They are the ones who created generational wealth. Ordinary traders got washed out. This is the exact same discipline required today. The breakout pattern in silver is our roadmap. But having a map doesn't mean you'll reach the destination. Your execution, your discipline, and your ability to manage your emotions will determine whether you follow it successfully. Now, let's talk about a hard truth that many investors struggle with. Opportunities like this triple breakout don't come with a guarantee. They don't show up with flashing lights and a welcome banner. They emerge from complex technical patterns that most analysts completely miss. They're supported by fundamental drivers that most people don't fully grasp. And often, the big move is already underway before the majority even realizes what's happening. This isn't the first time we've seen this movie. 45 years ago, gold investors faced the exact same scenario. The technical chart showed a clear pattern of compression, ready to explode. The fundamental reasons for gold to go higher were obvious if you were paying attention. But what did most people do? They dismissed it. They called it hype, exaggeration, or wishful thinking. They stood by and watched gold soar for 100%, all while making excuses for why it couldn't possibly be real. Today, silver is presenting that same pattern. The same structure on the quarterly charts. The same pent-up energy being released after years and years of accumulation. It's Steve, the same signal that has screamed major move ahead every single time it has appeared over the last half-century. So, here's the choice. Some investors will see this pattern and act. They will position themselves before everyone else jumps on board. They'll have to listen to friends and family tell them they're crazy. They will have to stomach the volatility that comes with being early. But if this pattern plays out like it did for gold in 1979, they could be the ones who capture wealth that fundamentally transforms their financial future. Then there are the others. The majority. They will wait. They'll want more proof, more confirmation, more certainty. They'll see the first big jump and tell themselves, I'll just buy the first dip. But when that dip comes, fear will creep in. They'll worry it's the start of a crash. They'll hesitate. And by the time they finally feel confident enough to buy the bulk of the opportunity, the life-changing part of the move will have already passed them by. Let me be clear. The triple breakout pattern on Silver's chart is now confirmed. The pressure that has been building for 13 long years is finally being released. What happens over the next 1 to 2 years could very well decide whether this generation of silver investors achieves financial freedom or spends the rest of their lives telling stories about the one that got away. The technical signal has been triggered. The historical parallel is staring us right in the face. Now, the decision is yours. That S, my breakdown of silver, S, historic triple breakout, and why the 1979 gold parallel is so incredibly important right now. But I want to know what you think. Drop a comment below. Do you see the same pattern shaping up? Are you already positioned for what might come next? Or do you think this is all just hype? I read every single comment, and our discussions here are what help me build my future analysis. If this video helped you see the markets in a new light, do me a favor and hit that like button. It really helps the channel reach more investors who are tired of the same old mainstream narrative. And make sure you subscribe and click the notification bell. These patterns are developing fast, and I'll be here every step of the way to decode them for you. This is Silver Cipher. Stay informed, stay positioned, and never let the crowd blind you to what the charts are clearly showing. I'll see you in the next video.